Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to take a quick peek at Meta Facebook earnings regarding the most recent quarter. I've been accumulating shares of Meta, and I kind of want to see if it's something I should be continuing to do, or if not so much. See what
Yep, I
happens.
actually need to know this because I also want to buy more. If you like this kind of entertaining stock market content, where it's two stupid guys trying to figure everything out, give us a like and subscribe, and here we go. Two Stupid Guys Trade Stocks.
What just occurred to me? With a face like Zuckerberg's, it's perfect sense that he wants to invent an avatar like universe where he can go and pretend to be someone else.
Gosh. So mean. Wait, I just realized that's Ready Player One
Yeah,
behind
yeah,
that.
that's Ready Player One.
Oh,
Yeah.
that's one of my favorite movies.
It's a good movie. This is the most recent quarter for Meta. The big thing here is revenue is down 1% year over year. Not something you like to see. They did kind of point out that, first of all, they had a couple headwinds going on. They talked about it from the conference call. Had this been on a constant currency basis, meaning like the dollar wasn't like ripping everyone's face off, they would have actually been up 3% this quarter. The other thing that they kind of point out as far as this goes is that the quarter they lapped was freaking phenomenal. So the quarter that they lapped was over 54% growth from the prior year. So it's kind of hard to sustain
Okay.
that level of pull forward. But they do have some significant kind of headwinds here, still from the whole Apple IDFA thing, and then also Mark Zuckerberg's investment in the metaverse, right? Reality Labs.
So this is actually kind of good news then, because if you have, companies always have those ridiculous quarters every once in a while where they're absurd. So they were actually in line with the quarter.
They were.
Close.
They were in line with what that ridiculous 54% growth year on year was.
Okay.
Now, in terms of kind of negative things that we talk about here, though, look at the operating margin. Went from 43% down to 29%. Pretty significant drop off in terms of margin.
Yep.
That is due in large part to aggressive investment. All right. Same thing happened with EPS. You have a 32% decline from 361 a share down to 246. Right.
Yeah.
Net income was $6.6 billion for the quarter. In terms of kind of user base, was all positive. They had good numbers as far as like the daily active, monthly active users on Facebook specifically. The big kind of issue that they had in terms of sell-through here was this 14% year-over-year decline in actual revenue for their ads. They
Right.
cited macroeconomic issues, uncertainty.
And this is something that you've been saying for quite a little bit. We just had the Graham Stephan video where it's because of the economic times that people are less likely to throw money on ads.
That's the argument. You hear this. I couldn't even tell you how many places I've heard this. Maybe I'm living in an echo chamber, but I don't know. I've heard this 100 times, maybe from different sources. How reliable each one of them are is a different question, but like that's always the thing to kind of keep in mind. Now, the good thing for us as shareholders is that they repurchased about $5 billion in Class A common stock, and they still have $24 billion authorized for repurchases. Their cash has been mostly flat. The big thing where the expenses come from was this headcount. Mark Zuckerberg apparently did a internal Facebook Q&A after this earnings call, and he was a little bit more blunt when asked about kind of their capital allocation plan, and talked about the fact that they did not account for an economic downturn, and they had been too aggressive with their hiring. This 32% increase in employees in a year.
That's
That's
a lot.
insane. Yeah.
That's a especially this year. That's crazy.
So they're going to
Jeez.
be a little bit more cautious about that going forward. Now, one of the cool things that you see here is this is actually like a breakdown of the revenue in terms of where the money is going, right? The actual cost of the revenue is 18%, which is flat to in line with where it's been over the last couple of years. But look at how much R&D has gone up. Yeah.
Yeah, that's
What do
all
you think
metaverse.
they're? Yeah, so it's not just metaverse. Actually, this is the thing that I'm a little bit worried about with Facebook and Meta, is that they're actually fighting two battles at once, right? He has the kind of Reality Labs, the Oculus, the kind of long-term metaverse play, but because of this IDFA thing, where they're no longer able to track individual users through Apple iOS changes, they've now invested a lot more money in AI. That's kind of Meta, Facebook's play on how to individually target and have good metrics in terms of tracking the click-through rate and that sort of stuff for their ads is by investing heavily in AI. So they're doing two battles at once. One,
Okay.
they're trying to save their ad business from Apple's move in anticipation of maybe Google making a similar move. And they're also trying to one up Apple and become the iPhone or the device to which people access the metaverse. That's the long-term play. That's the moonshot. Whatever you think of that.
I mean, honestly, if you're this big of a company, you have that much cash on hand, why not? Like, go for it.
I to a degree agree with that. Like I'm okay with them taking a moonshot with a portion of the money. I'm still like I have an Oculus and I think it's it's a fun thing to play with. I love Beat Saber, but like do I go in there for hours on end? No, I go in there and I play for an hour or two. It's really fun at parties. I don't know if you've gotten to play with an Oculus at all.
Yeah,
Beat Saber's not bad.
it is
Yeah.
pretty dope. I will say, you look at where video games were 20 years ago to now, it's almost unfathomable the amount of technological increase there is. So if you can have a metaverse world or even like a VR thing that can keep up the pace of that advancement. For instance, there's a game called Echo VR.
Okay.
It is the most insane thing ever. It's crazy. Someone look it up. It's like Ender's Game, where they're
Okay.
training in a zero grav facility. If he can pull this off, it's going to ruin people's lives because they're going to play this all day.
Oh.
But it could be pretty awesome.
Yeah, it's a big enough kind of prospect where like if it works out, it's so successful and can be so powerful. I'm okay with them taking some major shots and losing $2.5 billion a quarter on it. They're actually launching a new product. He said at the end of the year too. I forget the code name for it. The other thing I wanted to highlight with this particular slide here was this average revenue per user, just insane money that Facebook is able to generate from their user base. That I always love the line. It's like if you're not paying for the product, you are the product. But this highlights how valuable it is. Us that live here in USA, Canada, being worth like a couple $100 a year to Facebook. That's insane.
That is pretty wild. Yep.
Yeah.
Jeez.
In terms of the free cash flow, so this is still a business that is generating positive free cash flow, and they're using approximately what the free cash flow is per quarter for share buybacks. That was one of the questions that analysts actually asked in the quarterly report. Was like roughly around that same amount. They didn't say it specifically, but that seems to be what it's tracking. So that's what they're kind of doing with that free cash flow, is buying back shares, which makes sense if you think the business is undervalued, which I think it's reasonable at this point in time. Less reasonable when it was before. So once again, I threw in like the EPS for the year, about a $12 per share EPS. If you can expect about a 5% or so annual growth rate for the next 5 years, which is relatively low, and then a 3% growth rate for a perpetual growth rate, and a discount rate of about what the S&P returns. You're looking at about a fair value around 167 or so a share. Now, these growth rates I think are much more achievable for Meta than they are for some other companies. We just shot an Intel video. That's a different story. They did have the negative 1%, and they do have the headwind of the IDFA, and they do have to prove that they can break out and be continue to grow revenue. Post that kind of trend. They're now going to be lapping quarters where the IDFA was kind of fully introduced, so that they were now going to have a little bit better comps going forward, which is a good thing for them. The real question is, like, as far as continual share purchase for me, and I'm okay still buying it. It's about the 160 or so share range right now, and I'm still going to be purchasing Facebook shares at this point in time. I haven't seen anything dramatically change in the terms of their business prospects where I am unwilling to purchase at this point, compared to other companies out there that are not doing so well.
Vinny's jaded because we just filmed the Intel video right before this.
Yeah.
If they can hit 125, I'm gonna throw a lot of them. So I already have like 40 or 50 shares. I can't remember what it is.
Yeah.
But I'm waiting to average down until SPY hits 320. So, all right, guys.
Yeah. I'll catch you in the next one.
Later.